Thank you for checking out Philman Roll-Up and Associates Municipal Market Update for the week of December 7th, 2020. My name is Adam Bauer, and I serve as CEO and President of Philman Roll-Up and Associates. Well, this is our second to last MMU for 2020. As of December 7th, 2020, it seems pretty clear that all parties are accepting our next president. And so you're starting to see some executive office planning for that. And so certainly investors look at that and say to have that level of certainly is a positive. We are also hearing several companies talk about COVID-19 vaccinations, which are considered highly effective. Now it's more about a distribution system, or I should say multiple distribution systems to get these vaccinations to those who need it and figuring out who needs it first. So I think that is more the conversation now, and then will we get a vaccination? So very positive news. But while we have that positive news, we have very bad news. We have very high levels of infection rates throughout the country. We're once again seeing reports of will the hospitals have enough beds to take care of not only those with COVID-19, but also any other sicknesses because our hospital beds are so full. So we really are in a situation of locking down again, despite having some very positive signs that a vaccination is in sight. So with that background, we've had the stock market going up, I think as a large part to some of the positive factors that I've discussed, but that's not necessarily at the expense of the municipal market, which also has seen very low interest rates and money flowing in. But now let's get to that. Let's get to the supply. I'm sorry, I said supply, but let's first get to the demand. The green bars represent money flowing into the municipal bond funds. The red bars represent money flowing out of the municipal bond funds. And you can see since that March timeframe when there was a sell everything rally, you have generally seen money flowing in to municipal bond funds when you look at it on a monthly basis, and that continues. Just very steady level of interest that investors continue to show for municipal bonds. Now let's show the supply. And here, that green dotted line represents the average weekly volume, and we just about matched that last week. But this week, if you look at that hash line, you're going to see we're just a little bit over that. So now we are once again kind of pushing things to say, do we have enough investor demand to absorb a slightly elevated level of municipal bonds this week? So this week will certainly be an interesting one to watch. We're also seeing some dynamics between the taxable treasuries and taxable bonds, along with tax exempt, which we'll get to next. This chart, the brown lines show the amount of taxable volume of municipal bonds coming to market, and the green line represents the taxable spread to U.S. Treasuries. And you can see that that has narrowed. So while treasuries have gone up, you've actually seen taxable yields go down. Oftentimes I've told you that the taxable market tracks the treasury. Well, it does, but what we're seeing now is a tighter spread between treasuries and municipals, and I'll show you some more slides in a moment on that. So this chart is one where I've talked to you a bit about how municipals in many cases are double tax exempt, both state and federal. Whereas treasuries, they tax themselves, or investors still have to pay federal taxes on it, but the state does not tax those. So all things being equal, investors would prefer to own a double tax exempt municipal over the treasury. And what you can see here now is, once again, treasuries have a higher yield than the equivalent municipal. So hopefully this shows that investors are feeling very confident in municipal entities, but I think what it also shows is they're very eager to take advantage of that double tax exemption. And we haven't seen this kind of trend since before the pandemic was well known within the United States. So this is something certainly to watch, and I think it's an optimistic view from investors. Now, the tax-exempt range, getting back to that, is these brown lines represent the range of interest rates for each one of those maturities. And the red line represents the MMD as of 12/4/2020. And you can see we're very low. That 1 year's got as low as 0.11, but at 0.14, we're not far off of that. And that the 30-year, we're back near that low at 1.42. So for the tax-exempt bonds to come to market, we're in a very attractive time again, and rates are considered very low. I've talked to you a bit about the yield curve and how flat it is compared to some historical standards. And so if you look at that red line, that's 2015. And that would be a more traditional yield curve. And you can see what kind of slope it has to it. If you look at 1 year ago, which is the brown, and the green bar, which is, or I should say line, which is current, you can see we have a much flatter yield curve for those two. So that's something we should continue to monitor, and also was demonstrated in that last slide. So economic factors, I've told you, ignore these. We are focused on election, 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 and then every now and then I'd layer in the COVID-19 is another huge factor to look at. And I would say these are items that we're going to need to start focusing more on now that the election has been settled. But the COVID-19 pandemic and the shutdowns have made it so all of our data points are thrown off. But to the extent that one of these comes in different than expected, it certainly will have an impact on the market, or very likely will have an impact on the market. But here's your key economic data points that are coming up over the next 2 weeks. Finally, I'll conclude with giving you a list of the Film and Roll app registered municipal advisors. I encourage you to reach out to any one of these parties. If there's a particular transaction that's priced recently, one of them may have worked on it or have some information on it that can be helpful. So I thank you for your time and look forward to talking to you again in 2 weeks.